Well, hello again. This is Robert Schein, Managing Director and Partner with Blanke, Schein Wealth Management. Well, today's April 30th, 2020, and we're coming off of a very historic April as it relates to market movements, rebound from March lows. So month over month, it's sort of an indication why, once you have an investment plan, you have an investment strategy connected to the plan, like all of our clients at Blanke Schein Wealth Management do, and have, a good reason why you stick to the plan, because you're seeing, month over month, markets do move. We know that they're extremely volatile. We also know that there's policy intervention. We're going to show you today how that's helping us work through sort of the coronavirus pandemic that's an unknown to the markets, unknown to all of us, what it's going to look like and how it plays out in the U.S. economy, or how it relates to, our investments. So stay tuned and we'll go through that. Before I get to the dry erase board here from my office in Palm Desert, California, I want to say thanks to all of our clients, friends, and family for following, tuning in, liking, subscribing, all of that social media stuff, and more importantly, sharing this. This information is meant to be shared. So if you're on a social media platform and you happen to discover this, please share this so that more people can have the opportunity to sort of hear our thoughts here at Blanke Schein Wealth Management. Again, my commitment is on a daily basis to bring to our clients, friends and family across all the United States. Again, we're in Palm Desert, California. We have clients in New York to Florida, Alaska, as well as all the way to Hawaii and everywhere in between. So we manage our clients' assets here, but we're staying connected in every which way, from phone to email, and obviously this way in the new normal on a daily update as well. So let's get into sort of our ideas, our insights, our observations, what traders are looking at, what markets are thinking. So today's topic, we're going to talk about the S&P 500. Is it range bound? And we believe it is for now. I'm going to show you why in a minute based upon our research. The next thing we're looking at, and we're going to discuss today about the credit markets. And then finally, is there another round of stimulus? And the answer is yes. From a policy standpoint, our legislative updates are giving us that indication. But let's get into topic number one right now. So let's get right into this. And I'm going to talk about the S&P 500 and the range that we've just created that we believe that we're in right now. So I drew a chart of the S&P 500. You can see clearly that back to as most recent as February, for the S&P 500, we're about 3,400. So all-time highs on that index. So the economy was roaring along, unemployment was all-time lows, so everything was going, and then all of a sudden we had a government mandate shutdown and a lot of unknown unknowns as it relates to this virus. So that was the month of March. Panic, fear, everything sets in. What we also had, and I talked about this several times, is the magnitude and the swiftness of what policymakers did, as well as the Federal Reserve. So we had the Federal Reserve, as well as Congress and legislators, act swiftly, and that's fiscal and monetary policy. One of the things I think what they've done extremely right at this point in time is, Congress worked together, as well as the Federal Reserve worked quickly, really quickly. I think they learned from lessons, the Great Depression, as well as the Great Recession. It's about the size and the quickness that you act and react. I think the Treasury Secretary, Steve Mnuchin, as well as the Federal Reserve, both worked, I think, really well together to show, that there is a backstop to the marketplace, as well as, to corporate America and small businesses. So now we're dealing with the fallout. The economy is the unknown going forward. We have unemployment. We just hit that to 30 million unemployed, which is unbelievable, about 17% unemployment rate. We could see that number go to 20% unemployment when it's all said and done. So that's why we firmly believe that the S&P 500 is going to be range bound. I've talked about this in several different daily updates. And I firmly believe that. Yesterday we saw the S&P 500 sort of top out at the 2,900 level, 2,950. Today the market's selling off. So that's about right here as it relates to where the S&P 500 is. I also talked about support about 2,550 to 2,450. So that's the top side. We have upside, it's called resistance. The downside, we call it the support zone. So it wouldn't be uncommon for the S&P 500 in the weeks and months to come to sort of trade within this range, okay? I don't see us, and we don't believe we're going to go to all-time lows, and retest this low, and simply because so much policy intervention that I just described in this magnitude, and more importantly, the confidence that the Federal Reserve has said that we're going to market no matter what it takes. So I think that confidence is going to help sort of keep a bottom in the S&P 500 and the markets in general. But we could see a support test. There's going to be a lot of resistance here. And then there's going to be some support here. As long as we stay within that range over the next weeks and months to come, that's still going to provide a tremendous opportunity. You want a proactive money management style on this. This is where I think a lot of money could be made. So it's not something that we're shy away from. It's something we're going to look towards as it relates to what we want to see from the markets going forward. Now, another question is, Rob, how do we get out of this? What's going to be the catalyst right here to break to the upside? And obviously we all want to break to the upside. So there are a couple of things that actually could happen, and it could happen sooner than later, that actually get us through a breakthrough from a resistance standpoint. One is a medical breakthrough. I keep speaking about this. I think it's I think it's the most important thing that we're seeing right now. And I don't know if it's a story that's told enough, where the medical community, from science and technology and all of our medical professionals are working not only in the United States, but around the world. Imagine that if you could have the best minds, typically they're all the A students, realistically speaking, from all these institutions, but around the world working together on this. Plus we have the advent in the last 10 years of technology. So you've got, the supercomputers that are taking these, mathematical, statistical analysis and mapping the genome and all the medical science stuff we didn't know even a year ago and 10 years ago, and we're putting it together on a global scale. I tell you one thing, I'm not going to bet against that. I certainly am not. And I think it's going to be one great thing for humanity, that we're all working together on this and sharing that information globally speaking. So it's not just one person working on it. We've got all these companies, we've got all these great minds, we've got all these great doctors, and a lot of new inventions are going to come up. So this is how we get through something like this. So that can happen in the next 24 hours, that can happen in the next 24 days. No one really knows. But again, you've got the Federal Reserve that has put some support at all costs, and they've committed to the markets as it relates to that. So it's a very good confidence booster there, as well as some medical technology is working on, will we get through this, and we will, but when will we, and what's the timing of that? So that's the unknown going forward. But I think in the meantime, it's not uncommon for, we get earnings from corporations that are going to continue to talk about, they have zero visibility, they have zero clarity on, the next 6 months, 9 months, 12 months. So they're going to pull the guidance. If I'm a CEO, I'm going to do the same thing because you have the latitude to do so. So the market's sort of going to see through that and make their own determination of what direction we should go. But in the meantime, we could see the S&P hang out in sort of the trading ranges we're talking about. So the final topic today is another round with a question mark. There's policymakers out there right now in Congress, both sides of the aisle, that are talking about very specifically working on another round of stimulus. Even though it might be happy hour right now while you watch this at home, cheers to you and pour me another round. It's actually a great country music song too. But realistically, keep an eye on that. I think both sides are going to talk about what their wish lists are as it relates to this. Now, there's going to be a lot more, I think, horse trading when they have this ultimately play out and before it becomes law. And this could take some, not weeks, but this could take some months of horse trading back and forth. And it's not going to pass as quickly as earlier emergency legislation did. This is going to be more thoughtful. There are going to be a lot more controls on it. Who gets the money, how it's controlled, how it's doled out, who monitors it, who pays it back. I think they're going to have some time to look at it a little bit differently than they had to in a few weeks earlier with the emergency stimulus that Congress passed. But, we, at least from the policy research that we get every morning from Washington, that's what the research is telling us, that we are going to see another round of stimulus coming. So, like it or not, it is what it is. And again, it's one of those things that we're going to have to wait and see how the markets react. So thanks for taking your time today. God bless everyone. Stay healthy, stay safe. Bye-bye.